A deep dive into payments reconciliation. The reconciliation process appears to be a relatively straightforward one, but the reality is that the reconciliation process is a multi-step matching process, and it is rarely ever straightforward. The discrepancy of the level of details that exist between the corporate systems, the financial institutions' reports, the aggregated and summarized postings on the general ledger, and the final bank statements, create a nightmare for the finance and revenue assurance teams. Some of the main challenges are: multiple file formats from financial institutions increase matching complexity, problems with data accessibility, and data integrity. Transactions recorded in the corporate systems not included in the financial institutions report. Timestamp difference between the corporate systems and the financial institutions reports. Identification and validation of transaction fees, commissions, chargebacks, reversals, and withholding taxes on the financial institution statements add a layer of complexity. The ever-growing rate of transaction volumes delay the remedy of issues, impacting revenue recognition. Difficulty meeting deadlines during the period end. Operational model. Most part of payments are processed through credit or debit cards, banks, payment gateways or collection agencies. Payment reconciliation always is a challenge. There are two types of payments. Those initiated by customers. At the point of sales, marketplaces or IVRs using any payment method, credit, debit or gift cards, vouchers. Or at collection agencies or banks. And those ones initiated by the company on behalf of the customer, direct debit payment run. In both cases, there are three challenges. To reconcile original transactions recorded in the billing system or customer transaction repository against the financial entity's daily detailed transaction files. To reconcile financial entity weekly or monthly electronic payment advice, EPA, against billing systems or customer transaction repository and the general ledger accounts. And to reconcile bank statements against the general ledger bank accounts. Customers initiated payments. Customers initiate payments using any payment method, credit, debit of gift cards, vouchers, checks or cash. Transactions recorded in billing systems or customer transaction repositories are aggregated and summarized by type of card, type of sales channel and date, and are posted into a GL clearing account. Daily, financial entities validate the transactions and publish them for companies. The first step of reconciliation is to match financial entities' detailed transactions against transactions recorded in billing system or customer transaction repositories. Aggregated amount of reconciled transactions are reclassified into other clearing account. Business-initiated payments, direct debits. Companies initiate direct debit payments run. Direct debit files are sent to financial entities and transactions recorded in billing systems are aggregated and summarized by the method of payment, date, and bank or card type, and are posted into a GL clearing account. Daily, financial entities validate the transactions and publish them for companies. The first step of reconciliation is to match financial entities' detailed transactions against transactions recorded in billing system or customer transaction repositories. Aggregated amount of reconciled transactions are reclassified into other clearing account. EPA, Electronic Payment Advice Reconciliation. Companies receive EPAs or electronic payment advices and their associated deposits from financial entities. The EPA includes a header with a summary of paid and rejected records, a breakout of transactions included and excluded, fees and withholding taxes applied. First step of EPA reconciliation is to match previously validated transactions with a breakout at EPA report. Matched transactions can be posted in the bank clearing account and fees, chargebacks, and withholding taxes can be posted in the general ledger. However, there are several things to solve. Case 1. Transactions recorded in the billing system or customer transaction repository not included in EPA. Case 2. Transactions included in the EPA from previous periods. Case 3. Transactions that could demand a manual matching because timestamps between company systems and financial entities' records don't match. Case 4. Direct debits rejected transactions have to be reversed in the general ledger and initiate customer care actions. Case 5. Chargeback that belonged to previous periods. Case 6. Fees, commissions and withholding taxes have to be validated. Case 7. Some records could demand a manual matching because rounding or discrepancies in the amounts or lack of a clear reconciliation key. SAP Reconciliation Solution by GMB Technology helps you to reduce the exposure to risk while eliminating manual-intensive processes through an advanced transaction matching rule engine. Business users have full control over the process and can enrich and match transactions via an easy-to-use interface if it is necessary. GMB's Payments Reconciliation Solution is dedicated to identify, classify, and correct inconsistencies between corporate systems, financial institutions' reports, and the general ledger. Some of the key benefits of the solution are considerable reduction in the manual effort required for reconciliation, easy to identify fraudulent items and mispostings, financial risk reduction, enhanced control and improved operational efficiency. Minimal IT resources needed as the users are self-sufficient. A quick look into the solution: acquisition processes, reconciliation processes, recalculation processes, operational dashboard, financial dashboard, transactions rejected and disputed, breakout by payment entity, manual reconciliation board. If you want to learn more about SAP Reconciliation Solution by GMB Technology, please don't hesitate to contact us. Thank you for listening.